welcome back. I hope you're all doing really well. Lots of stuff to cover again in today's video, as there's been several different pieces of news from across the crypto space, and I'll also be showing you guys something almost revolutionary coming out of the HEDERA ecosystem, showing you guys how to actually earn some free Hbar tokens for just participating in some different areas of the community. Anyway, I thought I'd take a quick look at the crypto fear and greed index, as it's not something that I've covered in a video in quite a while at the moment, because we were in the depths of the fear zone. We are still in the fear zone at 27. However, we are moving back towards that neutral territory. And as we can see on the last week and last month figures, we're at 25 and 22, thus showing there is a little bit of confidence returning to the markets. If we scroll further down into the index over time, and I flick this into the 1 year view, which it's currently in, we can see we have bounced back up from some of those lows, those low 20s that we saw in October, sort of in November. November was a little bit healthier. And then of course, the beginning of December, things do appear to be looking up. Still, we are nowhere near where we were on the crypto fear index metric back in June, where we hit single digit figures of 6. And part of this as well is because of those inflation figures, and we are approaching those terminal interest rates. I do have a dedicated video on my channel talking about potentially the crypto market and sort of equity market bottom being in December/early 2023 of next year. So either this month or over the next 1 or 2 months, potentially, as we approach those terminal interest rates. There has been a bit of a spanner in the works, which I'll be covering in a minute, from 𝗟𝗜𝗡𝗚 over at the Fed as to what will be happening with terminal interest rates. But it is a pricing mechanism for majority of equities and similarly cryptocurrencies, and thus a good determining factor of where we may see these markets head over time. Wanted to quickly touch on this as well. Binance's proof of reserves raises a red flag. They recently released a report, of course, over the backlash of what's been happening with Sam Bankman-Fried and FTX and sort of other ecosystem collapses we've seen recently. Obviously, the main one being the centralized exchange FTX. So corporate structure, Bitcoin liabilities, and internal control quality are among the points of concern. So I believe this is a report done in conjunction with 𝗍𝗏. 𝗍𝗏 are a very well-respected firm. However, there were clauses written throughout this sort of, I think it was a 5 or 6 page report, where they basically turn around and say, you know, they've not really verified any of the numbers. If you actually look through the steps they took in that particular report, they literally just turned around and said, we requested figures from Binance for their different holdings, and then that's gone directly into the report. So there was no sort of cross-examination or deep dive checking of the figures that were being reported, and therefore the trustworthiness of this report is being called into question. Binance's efforts to improve transparency of its reserves also expose red flags in the crypto exchange's finances, according to accounting and financial specialists consulted by the Wall Street Journal. As noted by a former Financial Accounting Standards board member and investment manager, the report released by the audit firm 𝗍𝗏 give not bring investors confidence about the exchange's finances, as it actually lacks information related to the quality of internal controls and how Binance's systems liquidate assets to cover marginal loans. Another red flag raised by the newspaper sources regards the lack of information about Binance's corporate structure. According to the report, Binance's chief strategy officer Patrick Hillman was unable to name Binance's parent company, as Binance has been going through a corporate reorganization for almost 2 years, as well as differences between the total Bitcoin liabilities were also being highlighted. The exchange's proof of reserves show that Binance was 97% collateralized, therefore there's 3% there somewhere in the ether, excluding assets lent to users through loans or margin accounts, indicating that the actual one-to-one ratio of reserves of customer assets hasn't actually been achieved. 𝗍𝗏's letter states about the difference. We found that Binance was 97% collateralized without taking into account out-of-scope assets pledged by customers as collateral for in-scope assets lent through the margin and loan service, offering results in negative balances on the customer liability report. With the inclusion of in-scope assets lent to customers, though, margin and loans which are over-collateralized by out-of-scope assets, we found that actually Binance was 101% collateralized. So it's all sort of around different definitions, and it depends on which way the numbers are being cut effectively, but we are in the region of 97% to 100% collateralized on Binance's part. Binance's proof of reserve report doesn't also address the effectiveness of internal financial controls, doesn't express an opinion or assurance conclusion, and doesn't vouch for the numbers. I worked at the SEC enforcement for 18 plus years. This is how I define a red flag. Now, of course, when we talk about centralized exchanges, this is a view that I push an awful lot through this particular channel and other sort of social outlets and lots of other people within the crypto space will say the same. If you don't own the keys to the wallets in which your crypto is stored, it's not truly your crypto, and you can fall victim to different incidents like this happening where liquidations and margin calls take place. There's effectively a run on the centralized exchange and you basically run out of luck in terms of being able to draw that crypto. The best course of action is, of course, always to have a non-custodial wallet where you own the keys and the seed phrases of those particular wallets. A hardware wallet or even a software wallet will normally be better and safer than a centralized exchange. Regardless, I thought I'd throw this in here. It doesn't look like there's anything bad happening with Binance at the moment. However, this report wasn't quite what people wanted to settle the nerves of a large centralized exchange. Jumping across then, as this is a piece of news that I'm sure many people will bring music to many people's ears, I should say. News just in, the US has filed criminal charges against FTX founder Sam Bankman-Fried, and he has also actually been arrested sort of in the last however many hours or so. I think a lot of people were expecting this to happen at some point sooner rather than later. And in fact, many people were shocked that he was roaming around freely in the Bahamas after everything that has happened over at FTX and the sheer level of audacity that was taking place with that company and customers' funds. Flicking across as well, there's some more information about FTX, and that is that FTX actually stored private keys to wallets holding hundreds of millions of user funds without any form of encryption whatsoever. Court documents have revealed. So Alameda Research borrowed FTX customer funds without limits as well. A testimony of FTX CEO John Ray III has revealed that Alameda Research borrowed FTX customer funds without any limits whatsoever. Here's what FTX would have done to avoid the hack attacks if in the case it was a real attack. Store limited assets in hot wallets, which would be sufficient for the exchange to be operational. Move the assets to a cold wallet and after it hit the threshold. Never keep the private keys in plain text on your back-end servers. So again, it just goes to show the sheer level of madness that was taking place behind the scenes between FTX, Alameda, and the sort of 100 other subsidiary/sister companies that were part of that conglomerate network. And it's a good job that it has finally come to a close. Unfortunately, there will be a lot of people that are being stung quite badly from those liquidations that took place, and of course the defaults that will ensue into the future. And again, it goes back to what I just mentioned when we were reading that sort of Binance synopsis of that Mazars report. And that is, if it's not your keys, it's not your crypto. And things like this can happen out of absolutely nowhere. People get blindsided. They turn around and say this will never happen to X exchange because it is one of the largest. It's not worth taking the risk in the crypto space. And it's personally not something I would do. Some people call it fear mongering. However, this has happened dozens of times over the last 5 or 6 years that I could probably pull up a list of the amount of different sort of liquidations and bankruptcies we have seen due to the sort of growing pains and just gross negligence of some of these centralized exchanges that over the past few years. Now, talking about that inflationary pressure and those terminal interest rates that I mentioned at the beginning of the video, the US inflation figure, the headline figure, has actually fallen to 7.1%, which was lower than what was expected. And that is why we are seeing a little bit of momentum return, particularly at the moment, to the equities markets as of me filming this video. And I'm sure that will fall over into the crypto markets very, very soon. Flicking over, if we actually look at a CoinDesk report, the US Consumer Price Index, or CPI, rose 0.1% in November from the month prior, slowing more than expected from October's 0.4% pace, in a sign of progress in the Federal Reserve's campaign to bring down soaring inflation. The report pushed up prices for cryptocurrencies based on the expectation that less worrisome consumer price increases might give the Fed more cover to ease up on those interest rate hikes. On an annual basis, the CPI rose 7.1%, with the US Labor Department report Tuesday below the 7.3% projected by many economists in a FactSet survey. Bitcoin, the largest cryptocurrency, which has been relatively steady so far in December, did jump 1.6% in the minutes after the report was released to about just shy of $18,000. It's up 5.2% over the last 24 hours. Traders have been monitoring the data for signs of whether the Fed's rate hikes this year are helping to bring down the pace of the CPI increases, which earlier this year hit a 4-decade high. In general, tighter monetary policy puts downward pressure on prices of risky assets from stocks to cryptocurrencies. And again, I have a very detailed video on the channel. You guys can just look at my videos and search for that about the sort of bottoming of the crypto markets. I talk a lot about macroeconomic policy and how potentially we could see or how we could use the terminal interest rate as a potential sign for the bottoming of the markets. The weaker than expected inflation figure comes a day after the Federal Reserve Bank of New York's monthly survey of consumer expectations showed that respondents see one-year inflation running at 5.2% pace. The November CPI release is the final major economic report of 2022 and the last key input from the Federal Open Market Committee. We'll see before as this week's meeting kicks off Tuesday. The two-day session is set to conclude on Wednesday with a statement due about 2 p.m. ET and a fresh summary of economic projections from the top Fed officials known colloquially as the dot plot. Unfortunately, though, we can see that we expect the dot plot to lean hawkish, reinforcing the committee's view that policy will need to remain restrictive for longer to guide inflation back to target. Analysts at the big French bank BNP Paribas see the terminal rate actually now reaching 5.25% by March and holding that level until the end of the year. Communications will emphasize the likelihood of holding rates at restrictive levels over a longer time horizon, possibly even challenging current market pricing. They wrote in a note. Powell will hold a speech for the following FOMC rate hike decision at 2:30 p.m. on Wednesday. So what we can see here is potentially we might end up with a slightly higher terminal rate than we had seen previously, which was 4.9%. So a few percentage points. Again, this could rattle markets ever so slightly, and it could prolong this bear market that we're currently experiencing. However, the light is kind of at the end of the tunnel with these interest rate hikes, it appears at the moment, with us only being sort of 3 to 4 months away from potentially seeing terminal interest rates and therefore some stability returning to the equities and crypto markets. And of course, I'm still just averaging into my positions in cryptocurrency. I'm stacking so much HBAR at the moment. It's kind of found itself in a nice little channel. And I'm just dollar cost averaging day by day, building those bags. Particularly because it's done incredibly well over 2022 with the ecosystem developments, and I'm certain that 2023 will be another fantastic, if not even bigger year for Hedera's sort of development as well as use cases going out into the future. Now, what I spoke about right at the beginning of the video, and probably the title of the video, is how you can actually earn some free HBAR, some cryptocurrency for just participating within the ecosystem. It comes from 𝗟𝗜𝗙𝗘𝗥𝗥𝗔𝗟𝗦, and we'll talk about this quickly. So the ghost passes are something that I've given away previously, and I've spoken about 𝗟𝗜𝗙𝗥𝗥𝗔𝗟𝗦 quite a lot as an NFT collection on Hedera, and they will actually be acting, the ghost passes themselves, as a whitelist for 2 separate drops. Drop 4, which is the next drop that will be going live. We don't have confirmed dates yet. Of course, I will speak about that once the date is released. And again, for the final 𝗟𝗜𝗙𝗥𝗥𝗔𝗟𝗦 Ghost Club mint, there may be a couple of different mints in between drop 4 and the final mint. And of course, they were giving one of these away. Now, talking about this off the back of it, was some information about their new system they've set up on the Discord server where you guys can actually earn some free HBAR. So let me pull that up for you just now. So here we can see a message in the 𝗟𝗜𝗙𝗥𝗥𝗔𝗟𝗦 Ghost Club Discord server from Will, one of the owners. If you've got Will, Ray and Raf, this is an algorithm actually being developed by Raf. Trying something new today, we thought it'd be more fun if members could actually win small amounts of HBAR for the fun they create in Discord every day. So we actually built a micro reward service we are calling Ghost Pay that can send automatic HBAR transfers based on a user's participation within the Discord. We also thought this could be a very cool way for folks to invite and introduce new people to the Hedera community. New members can simply create a wallet, join the Discord server and start getting some of the HBARs right here. So the instructions are very simple. All you actually need to do is register your HBAR account ID by sending a message to the #rewards channel in the Discord server with the account number ID. So if you create an account and it's called, the account ID is 0.0, XXXX, whatever the numbers are, you type that into the #rewards channel, and then that links your Discord account with your wallet, and then you can start earning rewards which will be paid to that wallet account you submitted in the rewards channel. For privacy, the Smart bot will delete your original message containing the account ID and confirm that you are registered. If you don't receive an instant response, it didn't actually register properly, so you'll have to do it again. You'll start receiving HBAR rewards directly into your account based on what the algorithm deems as a valuable contribution. So the reward structure being all members of the Discord server are eligible to receive rewards. If you have a Ghost or Ghost Pass Discord role, so you need to own some of the NFTs and register your wallet with those particular NFTs on the Discord server. I'm sure you guys that have those NFTs will already be aware of how to do this from other places in the ecosystem. If you don't have any of those NFTs, don't worry, you can jump in and start earning without having to have these, but you will receive 2 times the base reward amount. If you have both a Ghost and a Ghost Pass role, you'll actually receive 3 times the base reward amount. For example, if the base reward is 0.1 HBAR and you do not have a Ghost or Ghost Pass, then you will receive 0.1 HBAR in rewards. If you do have a Ghost role but do not have a Ghost Pass, then it will be 0.2, and if you have both, you'll have a 0.3 HBAR reward. We'll be going to be learning a lot over the next few weeks, so that they will basically tweak the reward amount, and the algorithm that triggers each reward will likely change as we progress. More details, it's quite possible that some people want to try and game the system. Please don't. Raph literally builds these algorithms to detect and prevent this kind of thing at his in real life job. Please save yourself and him the headache. Anyone caught will become ineligible, booted, banned, and socially ostracized. If you notice suspicious behavior, please report it. Examples of things you are not allowed to do: create any sort of bot that will automatically try to trigger rewards, etc. Don't spam, DM the owners related to this subject at any time. Examples of things you are allowed to do: make interesting or funny content in the Discord server. It's a really relaxed place in the Hedera communities, in particular Discord for 𝗟𝗚𝗙𝗘𝗥𝗥𝗔𝗟𝗦 themselves. They'll perform well with the algorithm and post on Twitter with a direct link to it. Twitter shilling is acceptable, spamming people's DMs is not. Bug and vulnerability hunting and reporting are welcomed, and develop an insatiable thirst for more HBAR. If you have the Ghost Pay rewards also being sent to a wallet where your HBAR is being natively staked. Again, there's a video on my channel showing you guys how to natively stake. It will actually trigger those Hedera staking rewards for you as well, as often as daily. So you get that sweet daily compounding, which is really cool. You see there is this utility.jpg. Some additional notes as well. Since this is built on Hedera, we don't actually have to batch payments together. It's one of the reasons why Hedera is such a good use case for micropayments, and of course why Drop exists and why they built this particular bot within Discord. And you can send each transaction as soon as each micro reward is actually triggered. Bet you didn't think Mance was talking about the smart when he said step function. With that in mind, if you don't want to have a ton of micro rewards showing up in your account history, it will flood your account history. Use a secondary account ID to collect those Ghost Pay rewards, i.e. just create a burner account and link that instead if you wish to do so. And of course, you can post some different ideas and suggestions in the Smart Improvement Proposal channel. This is all beta at the moment. Expect chaos. This is a really big step forward, and we may see this get rolled out to different Discord servers if the team manage to nail the algorithm and it's all running really well. We could see this get rolled out into more and more of those Discord servers, potentially, if that's what the team wants to do in the future. It is a great selling point and use case of why Hedera, or how Hedera can be used, because of those low and fast transactions that can take place within the network. Jumping across, I can quickly show you an output of some of the rewards I received. These were literally all for several different messages. I spent sort of 5 minutes in the Discord server having a chat with Will directly. I'm earning 0.3 HBAR here because I have a Ghost Pass and a 𝗟𝗚𝗙𝗘𝗥𝗥𝗔𝗟𝗦 Ghost NFT. You can see there are 7 different transactions. I earned 2.1 HBAR for probably about 5 minutes of conversation. If I didn't have those, I'd only earn 0.1, which would be 0.7 HBAR, but free crypto is better than no crypto. And this is a great way to get involved in the Hedera community, learn a little bit more, get involved with these NFT projects, as well as earn some free crypto for doing so. Anyway, guys, hopefully you did enjoy this video. Of course, I will leave a link down in the description for the 𝗟𝗚𝗙𝗥𝗥𝗥𝗥𝗡 for the Discord server. Until the next one, I'll catch you then. Cheers.